Hello, I'm Wendy Kirkland. In this series of DVDs, I hope to be able to go through the chart setup for the Qs, to also run through a couple trades for each of the different strategies and patterns, and this is done with the hope that it will help to clarify any questions that you might have had as you were reading through the book. I find that sometimes actually hearing someone and seeing someone point out areas on a chart makes the whole process easier to learn. So let's get started. First, we'll run through the setup of the chart that we're going to be putting on the special EMAs that were outlined in the book. That is the 8, 13, 21, 55, 89, 144, and 233. And as it was mentioned in the book, they kind of work out to be a set of short-term EMAs, and that is the 8, 13, 21. The 55 is kind of a middle section or a dividing line between the two longer and shorter term set of EMAs. The 89, 144, and 233 are the longer set. We're also going to be establishing pivot points on the chart. We're going to place the relative strength or our RSI on the upper portion of the chart. The CCI, the ADX, the PPO, and another ADX are going to be placed on under the chart, below the candlesticks. And as the book pointed out, the top ADX indicator along with the PPO is going to create the pattern for the P3.5, and the PPO and the ADX line underneath the PPO is going to be our P3 pattern. So this is the beginning of our chart setup for the Qs. On this we have established the pivot points. You can see that in the center is the pivot point itself right here, and then you have the R1 and R2, resistance 1, resistance 2 above, and support 1 and support 2 underneath the pivot point. Sometimes your eye can pick up that support 2 is here because of this grouping of candles and a couple of the ones that are along this line and the high of this area. Sometimes it's obvious with the eye and sometimes it isn't. You can see here at R1 a number of candles have used that as a support area, and then it actually broke through, and now it's bumping against the pivot line as an area of resistance that it's trying to break through. We'll add the other indicators from here until we have a full chart set up. Here we've added the RSI to the top of the chart. This shows areas of overbought and oversold, and the dotted line is a middle range. You can see here during this period of consolidation that the RSI line has kind of bumped back and forth, touching and then finally breaking through here, this middle point, where after this long drop you can see that the RSI is oversold. At the high point here before it dropped, it was up in the high area where it was overbought. So just quickly looking at this indicator can show you when an area is overbought or oversold and is likely maybe to be ready to change directions. You can also use this as a means for seeing divergence, and divergence is where what's happening on the indicator is different than what is actually happening with the candlesticks themselves. That you could have, this case it's an agreement, so it's convergence, but we could say that perhaps these were sloping down like this, where the bumps, the tops of these areas were getting lower and lower, and if this were to be happening while the price was going up, that would be a sure sign that things were brewing underneath and that it was apt to be a change before too long. So let's continue and we'll see some of those areas as we proceed. Here I have added the commodity channel index called the CCI onto the chart, and this one is quite easy to be able to see the areas that are overbought and oversold, that they create these colored areas. The overbought area is these green peaks that happen as it moves above the 100 area. The oversold is the brown peaked areas as it drops below the minus 100 line, and the 0 is the middle range. So if you look at the price up here, you can see how it follows that as it dropped from this area of being overbought to oversold is this drop in price right here as it rose above the 100 line and got to the point where it was again overbought, is this gap that happened. We're looking at a daily chart, and its moves sometimes can span over a longer period of time. That, as you can see here, from when it was overbought and dropped, that it rose and up and down, but it did not actually get back to being overbought for several months. Here we went from September to November, so it took several months before it picked up steam and was actually heading back up again. So this is a very clear visual of overbought and oversold and what is taking place or perhaps going to take place on the candlestick chart. And again, we'll talk through specific movements as we proceed, but let's finish setting up our chart with the other indicators. I've added the ADX that will be used because it's going to be on top of the PPO. This is the ADX that will be used for the P3.5 pattern, and it will pick up moves like this downtrend that we see that happened here. We'll continue on and then we'll tie this all together. The ADX is one of my absolute favorite indicators, and as it was explained in the book, the dark line here that you see is the strength line, and it shows strength in the trend, but you don't really know which trend, which direction, until you add the directional line. So here, as we see, this has strengthened by rising, and we can look and see that it is the minus DI that is in control. That tells us right off the bat that there is strength in the downtrend. The red line, the minus DI, is the bearish trend, and so we can see by looking at this that the bears are in control all during this period of this drop. And then when we look here in mid-November, the strength line, the momentum line, is dropping, it's weakening, and we have the plus DI, the bullish line, rising, and yet it's rising. It gets to a point where they cross, and here there's all of this, I sometimes call it braiding or intermingling of the lines where they're switching back and forth. And if we look up at the price, what's happening is it's this jockeying and this shift of who's going to take control, who's going to be in control of the price. Is it the bulls or the bears? Is it the plus DI or the minus DI line? And the strength line just continues to drop and weaken until finally one of the DI lines takes control, and at that point it rose as the bulls took control here, but it actually, the lines flattened out rather than continuing to rise, and the strength line did not rise. It looks like it might be going to do so here, but it really is flat. Here it dropped again a little bit, and if you look at the channel that this has been trading in, this is a rather narrow channel that has been forming for a period of 2 months or so, and price has not risen much more than $1. And the ADX and the DI lines really give a a great clue as to the sentiment that is taking place in the market, and it helps you to either enter a trade or it helps you to stay out of a trade. And again, as we proceed and we look at specific trades, we'll go over this further as it applies to a particular pattern. So let's add the PPO here so we can put that in place. The PPO line is quite like the MACD, and so if you don't have a PPO indicator on your brokerage chart or your chart setup that you're using, you can use the MACD instead. They're quite close. And the importance of the PPO is really in the crosses. It's not in the touches, it's not in the almost crosses. It's in when the black line crosses over its signal line is an indicator of when things are changing directions. We will add another ADX, and this one now will be for our P3 pattern, and this is our full chart setup. This is what we're going to be using. For some of the strategies we don't use all of the EMAs or we don't use all of the indicators, but this is everything that will be needed to do all of the strategies that are listed in the book. Uses stock charts. It is my favorite charting service. I have nothing to do with them. I just love the visual qualities of the charts that I can produce. I love that I can annotate the charts and draw lines on them and keep lists of candidates that I want to be tracking. And this is the area beneath the chart where I can add what I want to add, and you can see here this is where I have placed the EMAs and done them in the order that I want them so that they have the Fibonacci numbers that I use, that I call the divine EMAs, and help keep me on track. Here is the area that I am able to list the indicators I want. This is the position that I want them on the chart, and I'm able to actually change the parameters. And here I have set them up to correspond as closely as possible with the moving average numbers so that everything ties in. If you do this and you do work with stock charts, you always have to click the update button in order to actually apply the setting that you'll be using. I usually use this fill the chart, and so if I am doing daily periods or 60-minute periods, it's going to give me the best time frame setup for the charts, and I usually don't need to change it from that. If I'm using a 15-minute chart, it maybe will show me a half a day. If I'm using a 60-minute chart, maybe it will show 3 days, and I don't need any more time than that. The daily chart usually is 6 months, and that can really show me the trends that have taken place in the past and how it all fits together as far as patterns is concerned. So I find that just going with what is needed to fill the chart for that time period works out really well. Okay, this is our first chart pattern. This is the P3, and it is probably my favorite pattern to trade. The Qs are my favorite equity to trade, so this is putting all of those elements together. The PPO is, I'm sorry, the PPO, the P3 is formed by the PPO and the ADX lines coming very close together. There are times when, and I say that this is subjective because these lines as they've come together are very, very close. There's other times that I could use this as an example. This is a squeeze that almost started to happen, almost started to cross, but it didn't, and you can see that this is wider. And actually the width between the lines squeezing does not really have anything to do with how well the pattern performs. That there's some times that you could have a very tight squeeze like we are seeing here. It perhaps would try to, I call it unfolding, and have it then re-squeeze, and not re-squeeze very deeply so the lines do not come super close again. And then as that unfolds out, that will be the pattern that will take the price on a new uptrend. It isn't necessarily the tightest squeeze. And then again, there's times when the squeeze just does its thing. It's very tight, it plays out, and it appears as if the tightness is what has kind of ruled that particular position. We're going to take this pattern and go through all of the stages that every single squeeze goes through 7 stages in what I call its life cycle, that it comes together as it's being conceived and then it goes through a life cycle. And so let's move on so that you can actually see how this works out, and we'll talk through it. The life stages, as I call them, the first one is the PPO and the ADX lines coming together, and as I said, how close is subjective. This is the squeeze's conception as it's being formed. The second stage is the PPO line crossing its signal line, and the ADX line, the PPO and the ADX line, they push away from each other. They start to spread, and this is what I call its birth. It's actually pushing the energy out, and this is the actual beginning of the squeeze. It's not the formation of it, it's the beginning. The third is the lines move further away. This I call the infant stage. The fourth, the plus DI crosses the minus DI line, and eventually it will cross the ADX line, the black line itself. And this is the infant that is going from a newborn into a toddler. The fifth stage, there are times that the PPO line will wobble, it will drop a little bit and touch the signal line. And sometimes it will do this once, maybe twice. And I think of this as like a toddler who stumbles. Here he's learning to walk and he hasn't really gained full control of his legs, and he's going to fall down and then get himself back up and dust himself off and go again. And this can happen once, twice, sometimes even 3 times. The sixth stage then is when the PPO and the ADX run in parallel to each other. I call this the adult stage. Sometimes I refer to it as the sweet spot. I'll be able to look at a PPO pattern that's playing out, and I'll say that the squeeze is going into the sweet spot. And this is a time when you can relax just a little bit, because what has happened is the ADX momentum line, the strength line, has gotten behind and is rising in support of the plus DI. So the pattern is on a roll. As it unfolds, it's gathering strength, momentum, like a snowball that's rolling down a hill. It's gaining momentum. And then the seventh stage is the time to exit. The squeeze comes to an end and expires. Now for the perfect squeeze, it's going to run through the stages, boom, 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 one right after another without pausing or re-squeezing. And this is what we love to see happen. There are times, and especially when the market is going through a period where it's consolidating, it's perhaps near a high, the indexes are near a high, and the squeezes will re-squeeze a couple times before they actually go through the 7 stages. The perfect squeeze starts a new uptrend and usually will continue on for some time. So here we have a daily chart of the Qs. This is the chart that we set up just a few minutes ago. We can see that the PPO and the ADX lines have come very close together. This is an area where it's almost like a false start. The PPO line was getting ready. Maybe this was, you could almost think of it as false labor or something for us women, that the PPO line almost crossed. It started, or it actually did cross, and then it slipped right back down again as was just not ready. And though the minus DI line here has dropped and it's crossed down through the strength line and so on, it isn't until the plus DI line here really starts to rise and the PPO line again crosses its signal line that we really are at the birth area of the chart. And so we have number 2 here is our second, where I say the lines are pushing away from each other. Here where they were close, now we're gaining distance between the lines. So this is the second stage. The third is where they push even further away from each other. The fourth is where the DI lines actually cross each other. There's a little bit of a slip here, but this is the main cross that has taken place. Now number 5, I've marked several of them here, and I'm going to spend a little bit of time talking about this so that you really are able to gather what's taking place. That number 5 is the stage that I was calling the wobbles, and often the PPO lines will come and they will touch each other like it did right here. In this case, it actually broke through and crossed down. Here it went up, crossed down again. And these are almost, to me, like in baseballs, the runner running into slide into base and they just couldn't stop quite in time and they slid over the base a little bit instead of just touching it. That they just were not able to put the brakes on quite fast enough. If you look up here at the candlesticks, this is the area where we would enter the trade. Here we have the cross, the lines have pushed away, the price is starting to go up. And here at these wobbles is actually areas where the price drops and is going to test support. It can be testing support. As you can see here, it's against this 144 line, and each time it dropped down it touched that area and then it rose right back up again. There's 3 of them, and this is the areas that is this test of support of the PPO line. And here it skidded over. Now a person might have exited here as it actually crossed over, but what might have held me into this trade is the fact of knowing the stages of the squeeze, that it has not gone through the adult stage yet. It has not gotten to the point where I know that the squeeze pattern is going to expire. I can look and see that this is a period of time when the price overall is consolidating. I can see, as I've drawn here in the circle, the red circle, that the ADX lines are braiding back and forth. It's this fight for control, up and down, up and down. And finally, at this point that we have the plus DI came down, tested one more time, and bounced off of the minus DI line and then took off. And it has remained in control for this 2-month period of time from August until September. So once the squeeze actually got started and we perhaps would have entered right here, it went through a period of time where it consolidated, it did this swings back and forth. This would have actually been enough to have earned a profit at this point. If it went up, you could have, when it dropped again, you could have exited. It would have been enough profit. If you had held through it because you know the stages of the squeeze, you perhaps could have ridden out this period of time and then just rode the squeeze all the way up. And we're going to look at some other time frames that's going to take you through the stages where there isn't so much indecision, there isn't so many wobbles. 3 is a good many. There's usually 1, often 1, sometimes 2. 3 is a bit much, but this is the case that I ran across to use this as an illustration. So here we are now down to the 6th stage. This is the adult stage, and this is where I'm saying that the PPO is rising, the ADX line is rising, we have the plus DI in control. The lines are running parallel to each other. It's like railroad tracks. And then finally, when the PPO crosses down, this would be our exit point. The squeeze is expiring. It did go up a little bit further, but there's no reason to be greedy. We're not in it to get exact highs. You can see as it did drop, it went up and tested here. It crossed a little bit, but there was no new great uptrend. That this is the end of this particular squeeze pattern. It started here and it ended there. It's time to move on to another trade. At the same point that we're seeing the PPO cross down, we're also seeing that the plus DI is losing strength, that it actually held on for a little longer, and it took a while for the minus DI to get into the game and actually cross and have the price start dropping. But this is the point that I would exit. This is the point that I would call the end of this pattern. It went through all its stages, 7 stages that every single squeeze must go through. It maybe will re-squeeze once, it maybe will re-squeeze twice, but these 7 stages is what every single squeeze must go through. So the slides seem like they've been anxious to move forward here. I've flipped back and forth, so let's see what the next one shows us. This is a 60-minute chart, and it actually has a couple squeezes on it, and these were squeezes that were more direct, and we'll just run through the stages quickly. I won't spend quite as much time talking through, but you can see this is where it formed. Number 2 is this is where the lines are starting to push away from each other. This is the 2nd stage. The 3rd is when they push away further still. The 4th is where the DI lines actually cross. Now here it went through a period where the DI lines did the braiding back and forth like braiding a girl's hair, and this corresponds with the wobble, the stage 5. It comes down and it tests the signal line and then uses that and bounces up. The bounce up then is the stage 6, where we have the lines running parallel. You can kind of see where it made that turn to start turning up, and that was right at the point where as a toddler it fell down. It's testing its legs. It's saying, okay, this line of support is going to hold, and then it continues the run up. And then we have stage 7, where this particular trade has expired. It's the end of the squeeze pattern. It's run through all 7 stages, and the PPO crosses down, and if we look up here, it was once it crossed, the price really started dropping. It went right back down here to test the lows from back earlier in the week. Here we have a second squeeze that has formed. The lines have come close together. The PPO and the ADX line have formed a squeeze. The 2nd stage is where the lines start pushing away from each other. The 3rd is where they push further still. Now this one, there is no real wobble in it. We have the 4th stage is when the DI lines actually cross each other, and it crosses the DI line, the ADX line rather quickly, almost at the same time that it crosses the minus DI line, and it goes straight up into this little parallel section. Now this didn't run parallel for a long period of time, but the lines did go making a railroad track, and then the seventh stage, the PPO crosses down, and this pattern has expired. You can see if you look up here that each time it's dropped down to a level is a past low, and it tested that area. Up here it went up to the past high and tested it before it dropped back down again. So what we're doing is we're following the pattern of the squeeze, and the squeeze is giving us our entry and our exits, and we can see then how it plays out on the candlesticks. Now move from $62 up to $64.50 or so is $2.50 move. That would be a very, very nice trade. Now in this particular case, and I made a note of it up here, that the trend continued up after the squeeze played out, after that second squeeze, and went a couple dollars more in an upward direction. But the point is we are trading the pattern. We're looking for entries, we're looking for exits, we're following the rules. And even though the price did continue upward, we didn't know that at the time that this PPO crossed down. There was no reason to have held while this price dropped like this. So exit when the seventh stage happens, when the squeeze is over, and you go on to whatever your next trade is. That the beauty of this strategy is there are going to be short trades, long trades, trades that develop in different time periods, but you are only focusing on one equity. There's always going to be some strategy, one of the strategies that you will be able to apply to one of the various time frames based on what you have going on. That if you have time to watch a trade over the course of a day or two, that you can trade the intraday charts. If you are going away on vacation, you could either not be in a trade, or you could be in something that's going to last for several months and that you don't have to monitor day in, day out. So we have touched upon the re-squeeze, and they do happen. In a sense, it's almost like the toddler that is getting up and testing his legs, and sometimes the squeeze will start to unfold. You're going to be testing the walking process, and he falls down and he just decides, I am not ready for this. I just don't have the strength to stand up again. Or maybe he was, if you want to say, hurt badly enough, his bottom was bruised, that he just is not ready to get back up and test his legs again for a while. He has to recuperate, and then the squeeze will unfold a second time and try. So a re-squeeze, the squeeze begins to unfold, loses strength before the ADX line turns up to support the new uptrend, or support the plus DI as it's heading up. The PPO and the ADX lines draw back together again, and this is again subjective, that sometimes it's rather tight, or it can be just a brief cross down of the PPO, and it's just a short time before they end up heading up again. The lines come together until they push away from each other. The process starts over until it goes through the 7 stages, and it will continue to squeeze and re-squeeze until it does go through all 7 stages. So you are going to be able to get to a point where you can open a chart, your eyes will go to that pattern, and you will instantly be able to tell and look and say, this squeeze now is in the sweet spot. This squeeze has just had a wobble. This squeeze is very close to wrapping up and being finished for this particular squeeze. And you will not have to sit and look at the chart and wonder, well, is it time to get in? Is it that? You will be able to look at the stage and know exactly where your entry either is coming to be or it's past and getting close to an exit. You will be able to tell that in no time after you've looked at a few charts. This squeeze, I'm pointing out here the process of re-squeezing. Here you have the original squeeze. You have the lines as they have come up. It actually did, this probably would have been considered like a toddler wobble. Here's actually the re-squeeze. The lines have come back together again. Here it tried to cross up. The lines are spreading apart, and it re-squeezed a second time. And so that this has had, this original squeeze that happened over here has had two re-squeezes. This one you would have exited when it crossed down through the PPO line and waited until it re-squeezed. If you had entered here, we usually, and I think I've said this in the book, you want to wait till there's a little bit of white space between the lines. But you perhaps could have entered here and ended up getting right back out again, and would have had a small loss if you had followed the rules of entering when the PPO line crossed down. Again, I'll point out here how during this period of time, the lines, the DI lines, were braiding, and there was not any strength going into either direction at this point. Here, as it re-squeezed, you have some momentum and strength, and it is in the minus DI line is taking control. So what we're experiencing is this drop that is happening here as it re-squeezes. You have a re-squeeze right here, and then it goes through the 7 stages. So here we have, one is the formation of the squeeze, the conception of the squeeze. The second is as the lines push away from each other. The third is the lines go further. In the second stage here, you actually have the PPO cross. They're pushing further. Here is the point where the DI lines, the plus DI line actually is taking control, and the minus DI line crosses down through the plus DI, but also through the ADX line. This could have been considered a wobble, and I didn't mark it with a 5. And here's a second one, just this little dent here. And 6, we've got the lines running parallel. The plus DI is in full control, and then as the PPO crosses down, this is where the pattern expires, and we see that the plus DI line is dropping. So we have also the momentum coming out of the bullish line, the plus DI line, and that's happening at the same time that the PPO line is crossing over. So where these two squeezes got started, they never fully moved and went through all 7 stages. It took 2 more attempts before it actually got enough going behind it to be able to go through the 7th stage. And if we look up here at the candlesticks, you can see what's happening, that this is the area where we had the first squeeze. We had a PPO cross, and the plus DI line did take control for a period of time, and we have this upward movement. And then here is the cross down, and what was an extended wobble. This is where you would have exited, because you knew at this point that it was going to re-squeeze, drop, and it's trading in this channel. It's going up and down within this narrow range, and it wasn't until we finally went through the squeeze, going through the stages, that it was able to break out of the channel that it had been trading in. So the move from the original squeeze would have been from here to here. Then you would have re-entered down here again at the bottom of this channel, and then have ridden it up to this higher point. Alright, well, that kind of covers and goes through the stages of the squeeze and the re-squeeze, and we've seen a couple examples of it going through all the stages. So we will continue on to the P3.5, and as explained in the book, we're going to use the ADX line now that is on top of the PPO line for this pattern. And as a as a P3.5 is forming, it's a little bit harder to identify because the ADX lines and the PPO line are mimicking each other. That actually this area right here is easier to actually see than the one that I've marked, but here the lines are following each other, and this can happen while a P3 is unfolding and the lines just kind of run in tandem with each other. So I've marked an area here that we have the lines running close. Sometimes there's less space and more space between them, but it isn't until the minus DI line begins to take control and start heading up. And so you have a number of things that are going to give us alerts in the key elements that we need to be able to follow. But the P3.5 usually starts forming at the end of an uptrend, and often it is at the end of a squeeze. So this is one of the reasons that we are able to focus and just trade one equity. You can trade the squeeze going up on the uptrend as it unfolds, and then as it weakens, it is going to be creating a P3.5 pattern, and we're going to be able to see that and follow that on the chart. So we'll work through this stage by stage. Here is a 15-minute chart where the other one was a daily, and you can see that the circled area kind of highlights a place where the lines of the PPO and the ADX are running parallel to each other, and this is the beginning. This is the beginning setup, and it's happening after the price has had a nice uptrend here, and this is the beginning place where it begins to weaken. So the P3.5, this is the stages that it runs through. You have the PPO and the ADX lines. They come close together as they mimic each other, as we've just been talking about. This is the P3.5 conception stage. Then you have the minus DI rising. This is a signal that birth is getting near. You have the PPO is going to cross down and over its signal line, and this is the actual birth of the P3.5. Then you have the minus DI line crosses the plus DI line, and eventually it will cross the ADX line. This is the infant stage. In this too, there is the PPO wobbles, the toddler stage where the PPO line tests or goes up and bounces off of the signal line. And then there is the spread apart of the PPO and the ADX line, and this is the adult stage. This is the sweet spot, and then 7 is the time to exit. You'll be able to see the rollover of the ADX line and the drop of the minus DI line to show that the pattern has run through all the stages, it's gotten tired, it's ready to expire. The perfect P3.5 will run through all 7 stages without any delays or re-squeezing as it unfolds, and this is what we hope that will happen, and there won't be the delay of any re-squeezes. The P3.5 squeeze starts a significant downtrend. This is a daily chart. This was, oh my goodness, this is so sensitive. I barely touched the cursor and it's moving around. We have had a P3 play out. We've had a nice rise. One of the very beginning signals that we will have a P3.5 as starting is the CCI being overbought, and you will see a number of the green peaks up here. This has been overbought for a number of weeks. And so we've had this nice high rise, and now it's beginning to weaken. And as soon as it starts dropping down below this 100 line, we've had it happen a couple times over here, and this was on the rise up. The EMAs had not started to cross yet. The plus DI was still in control, and so these are the signals that your eye will begin to pick up and that you'll start watching for, is this weakness that is taking place in the CCI. And at the same time, what do we have happening here but the minus DI rising and the plus DI dropping, and the ADX line losing strength. The momentum line is running down. So we have stage 1 here is the ADX line and the PPO line mimicking each other. That's kind of the formation. The second line is the minus DI line rising. The third is the PPO line actually crossing down, and this is your entry point, is the third stage when the PPO line crosses down here. The fourth stage is when the minus DI line actually crosses over the ADX line, which it did up there. The fifth is the PPO wobble, and as you look at the PPO line here, you can see that it actually happened about 3 times. It didn't actually cross over the PPO line, but there is definitely 3 areas here that kind of dent in where it went in to test the signal line, and you can see what those were here on the charts. They went up onto the EMAs but continued down, and it isn't until it finally down here crosses up that we have our expiration. The sixth, I skipped ahead a little bit here, the sixth is the sweet spot, and this is recognizable as the lines push away from each other, that they actually make a V pattern, if you want to say, coming into where the squeeze started. They're closer together, and so they push away from each other and make this V pattern, if you can see what I'm trying to indicate here with the cursor. And then the seventh is where what I called the rollover of the ADX line, and the PPO line is getting ready to cross back up. And here we go again. There was a P3 squeeze that helped to form this area that's the P3.5, and now we're cycling back in this drop that we've had in price, and as the stages have unfolded, we have the squeeze forming again. And so this is an entry for a put up here as the PPO crosses down, and we have our exit signal here at the bottom, and we could actually turn around and start looking for the alerts and confirmations on the P3 pattern and get in and ride it as it unfolds here, as we have the PPO cross up, get in and ride it up for that trade. This is the 60-minute chart. This is actually the one that we looked at a few minutes ago that indicated the lines coming together closely where they mimicked each other, and then it ran through all 7 stages. Now, it won't take very long for your eye to be able to pick these up, that you have your PPO cross down. This is the entry. We have the minus DI line taking control. We've had a CCI that was overbought, so this is really like the beginning signal alert. PPO is the entry. We have the minus DI going up, and look, as it's dropping, here's would be a wobble as it comes up and it tests the signal line, and we have that pattern where the lines push away from each other and create this V, or perhaps you could say that it looks like a horn, that the lines spread away from each other. And as the ADX rolls over, this is your area where the minus DI is dropping. This is the area that you would be exiting. It also is then forming a P3 squeeze again, and as this forms, you know that the trade is wrapping up and it's time to exit. The P3.5 can also re-squeeze. The squeeze begins to unfold and then loses strength before the ADX line turns up to support the new downtrend, or the minus DI line as it's rising. The PPO and ADX lines draw back in together, and the PPO actually crosses up and the ADX line heads down. The lines come together again until they push away from each other, and the process starts over until it is completed. This is going to point out and show an area where the P3.5 actually re-squeezed, that you have the formation here of the, as the lines are mimicking each other, this is the formation of the P3.5. We have here where it has dropped down, been oversold and dropped down. We have a weakening of the plus DI line. We've had the PPO actually cross down, so this would be a point where perhaps you would have entered the trade. And we have a couple of wobbles where the PPO line tested the signal line. It's pointed out by those arrows that are there on the PPO, and I've circled the areas on the minus DI line here, but you can see that it actually never took control, that even though the minus DI line rose right here and here, it actually never took control until this area, when the PPO line again crossed down, and then we have this drop. So that the PPO crossed up, this would have been an exit place. This is where it actually re-squeezed, where the lines are then going to come in together again and kind of mimic each other. But here we have the PPO line cross, and we had the CCI again drop below the 100. So this is one that it just did not get the momentum behind the strengths. Even though the plus DI line dropped, you can see the momentum here behind the uptrend was still in the plus DI, in the bullish move. This made an effort, but it just was not ever able to actually take control until the lines crossed here. So let's talk about the specifics of entry. We kind of glossed over them as we were running through. For a P3 trade, you are going to have alert signals that are going to give you the clue and say, okay, things are starting to set up here. There's a P3 forming, and then you look for the confirmation signals. So let's run through them very quickly. The alerts that a trade is forming, you'll have the PPO and the ADX lines will come together, and this is what I was calling the conception stage. You may see some bullish divergence that is taking place on the RSI and the CCI. It could be as they're rising from being oversold. The RSI indicator begins pointing up, and the CCI heads up over the minus 100. You will have some positive candles on the chart, and the EMA will be moving, 8 EMA will be moving up toward the 13 EMA. You will have the histogram of the PPO. The blue blocks will be narrowing and tapering upward. And you'll also have the ADX line begins to push away from the PPO line. you will start to see that area begin to widen just a little bit, and at the same time the minus DI line will start heading down as it's beginning to lose its strength and control over the previous trend. So the confirmations for actually getting into a trade, the buy signals, is a PPO line crosses up and over its signal line. At the same time, the histogram, this is just a different visual, will cross up over the zero line, and the ADX, the plus DI on the ADX, will cross up and over the minus DI line. And I suggest that you usually wait for an actual cross before getting into a trade. That sometimes when the PPO crosses up, it's just so tempting to get in a little early, and I really suggest that you wait so that you don't have a false start. And there's times that the DI lines can act as resistance, that the green plus DI line will go up and it will just touch the red one, and then it'll bounce down, and there'll be another little leg down before it actually starts traveling. The only time that I will consider this, and the only exception, is if everything just looks so promising and everything's in line, the market's in an uptrend, the overall market's in an uptrend, that maybe the sector that say the technology sector is beginning to boom, and Apple is part of the Qs, and everything just looks so perfect, I will maybe chance an early entry if the DI lines have crossed on the time frame chart before the one I'm looking at. So if I'm looking at a daily chart and I'm considering a little bit in early entry, I will look at the 60-minute and make sure the DI lines have crossed on the 60-minute. If I'm using a 30-minute chart to trade, I will look at the 15-minute to make sure that the DI lines have crossed on the 15-minute before I will enter on a 30-minute. And that is the only exception, but I don't really advise it. It's only when everything is lined up in place and you just can't stand it that you're giving away just a little bit of more of a move. And then as the trade proceeds, you will be watching for candles to close above the 8 EMA. Eventually the 8 EMA will cross up and over the 13 EMA, and then the short term set of EMAs, the 8, the 13, the 21, will cross up over the longer term EMAs, and this will all take place as the squeeze unfolds. And that's one more thing to watch for as far as strength in the pattern as it unfolds, is that ribbon of short-term EMAs being in uptrend formation, where the 8 is on the top of the 13 and the 13 is on top of the 21, and all three of those are on top of the 55, and so on. And as long as those EMAs are in uptrending order, the price is going to continue going up. It is only when they start bending and curling over each other that things are beginning to weaken, and you will also see that then on the other indicators. It could be a little bend that's going to be a wobble, or it could be the expiration of as it goes into the 7th stage. On this chart I have noted one squeeze that went through all 7 stages. This is a weekly chart, so you would be getting into a longer term trade. This is a trade that lasted for a number of months, and we are not specifically going to discuss the trade that started developing back in September of 2010. We are looking at the current squeeze that may be forming. If you look up at the candlesticks, we have 3 that have stopped right at the pivot line. And this is an indication that perhaps this downtrend that it's been experiencing for a couple months, that the price is finding a bottom. And when we look at the chart here, we see that we have had the PPO cross, and it's been weakening, and it's had a drop. It actually had an area here where it tried to cross up, and it just barely skimmed against the signal line, and this acted as an area of resistance, and it just bounced off of it like a pinball and then dropped back down. So now we have this area of that we could be watching, thinking that a squeeze is going to be forming. This is the earliest stage. We see the CCI is beginning to taper up. At this point, the histogram has not started to narrow like it did here. It's still, this bar is longer than that one, so it's still heading down. This might tighten a little bit more, and we don't see any activity of the plus DI gaining any strength behind it. We do see that the minus DI is weakening, so we're seeing the beginning clues that something might be happening. We look up here at the RSI, and we see that that has turned up from this area of being oversold. We see these 3 candles that have stopped at the pivot line, that this very well may be acting as a area of support, and that it will go up from there. So we will move on and see how this develops. This, now we're starting to see even more signals. Starting at the top of the chart, you have the RSI is rising even more. It's right at the 50 line. You will remember from the book, the 50 line is like middle ground. So below it is bearish, above it is bullish. We've had a couple positive candles as it's risen above the pivot line. The CCI has actually crossed over the minus 100 line. The ADX line now has the plus DI heading up, and the minus DI line has continued to taper down. We're right here discussing as it's rising. The histogram bars are starting to narrow. At this point, we don't even have the PPO line heading up toward its signal line, but we can see that there's some strength brewing by the blue blocks or blue bars of the histogram, that they're beginning to narrow. And I used this ADX, and I should be speaking about this one. We see the plus DI rising. So let's go on. It's still early. We're not going to jump the gun before a PPO cross, and we're going to wait for the plus DI to cross too, but we're seeing that things are starting. Here we have even more indication the PPO line has gotten closer. It is right at a point where it could cross. We have had another positive candle. The RSI has crossed over the 50 line, but it has now flattened out. It's not still heading straight up. The CCI has crossed its 0 line. It has just kind of risen. It went flat for, you can actually see it right here, this little drop, and now it's continued back up. And the ADX lines, I'm going to slip down to where I'm supposed to be. The ADX lines here are very, very close together, but they've flattened out. And they can sometimes act as resistance to each other, that they can get close and just bounce off. And the PPO line has not yet crossed, but has the histogram blocks right at the 0 line. It is so close, and this could be a time when you might be tempted to jump the gun and say, I'm going to chance it and get in early, and there's times that it will be okay, but there's times that it won't. And look what happened. If you start again at the top of the chart, and that's the way I like to do it, is let my eyes run from the top down, we have the RSI line cross back down into bearish territory. We've had two negative candles. The CCI, in a sense, bounced off that zero line and started heading down. The PPO line went up very close to the signal line and bounced off. The plus DI line, you can barely see it. Looks like it crossed, but they both now are heading down, and the ADX momentum is heading down. So even though this was a nice squeeze, it wasn't quite ready that it's going to test perhaps down here at the 89. Maybe it will go down to this point again and test, or even back down to the pivot point to see if indeed it's ready for a new uptrend, or if there's more downside to go. We start at the top. We have the RSI went back up over the 50 line. It's back in bullish territory. We've had two positive candles, and look, it went right back down to that pivot point on that week, went down there, touched the pivot point, and then by the end of the week drew back up and is sitting right on top of the 89, which is supplying an area of support. It actually worked as support down here as well. But it's amazing how the pivot points and the EMAs are often exactly where the candle price move or the equity price move stops, right at the lines. We have the CCI now has moved above the zero line. We actually have a confirmation for entry. We have the histogram is above the zero. That's a very clear visual when it's sometimes hard to see whether these lines have actually crossed. We also have had a cross of the DI lines so that we could actually enter this trade right here with a certain amount of confidence in the pattern that it has been tested, support has been tested, and it's now ready for another leg up. It has found a bottom and it's ready to go. So we would have purchased, we will say, the June 12th 52 strike call on October 3rd. Because this is a weekly chart, we are going to buy a number of months out. There's actually 256 days left until expiration. The delta is 51 and the premium is $5.30. So that would be $530 per contract. Our exit rules, and I'll kind of recap these, is because we know now the 7 stages that the P3 goes through, we will remember that the wobbles can sometimes look like the alerts, and that there can be a wobble that actually results then in a PPO cross down where there would be an exit, or the PPO can touch the signal line and bounce off. And if this happens too many times, the second or third time test of the PPO line can show that there's a building of weakness. So the alerts are the RSI drops from an overbought area, the 8 EMA drops closer to the 13 EMA, and it appears as if it might cross. There may be a couple negative candles in conjunction with the other alert indicators. The CCI drops below the -20 line. The PPO histogram blocks begin to narrow downward. The black ADX line flattens or curls downward, and the plus DI line starts to head down, and the minus DI line starts to head up. The actual confirmation sell signals, and these can happen in conjunction with each other, that I often say that it's better to take gains that have reached your price target rather than wait for a firm confirmation signal where then you've given back a portion of your profit. You might as well, if you have set, say, a price target that if it reaches up and hits R2, that's what you expect to happen, and it does that, go ahead and take your profit. It doesn't matter about hitting highs, and that if you leave a little money on the table, so what? You've earned money that you didn't have. And the line in the sand exit signals would be a crossover of the PPO line, or when the 8 crosses over the 13. Did I say EMA? A crossover of the PPO line is a line in the sand, get out. A cross of the 8 EMA over the 13 EMA is a line in the sand, get out. Okay, so this is our trade that we started. So we're going to see how this plays out. I have noted the stages, the life cycle of the squeeze stages on there. That we had the first stage right here is the formation. This is the area where it looked like it was going to happen, but it didn't happen until this point. And this is our entry. That the third stage is where they actually push further away from each other. We have the DI line cross. This is the fourth stage. Here we have the wobble, where the line comes, and look at it, just lays right on top of each other almost for a month. It just sits right there and doesn't actually cross down, just slides right along. And then we have the stage 6, where we have the lines running parallel to each other, and we are just now coming into the stage where this could be the time that the time to exit, that the trade is beginning to expire. You have the first little curl here of what I call that rollover of the PPO and the ADX line. We have the first week of negative price movement. We've had the RSI drop down from being overbought. The volume, the sell-off volume here is higher than the previous weeks. We see the plus DI line starting to head down and cross over, or getting ready to cross over the ADX line. To me, this is showing real signs of being tired. Look at how many weeks, positive weeks, it's had. And the two candles prior to this red one, look how they closed at the very bottom portion of the trading range. That is another sign that it's just getting top heavy. It's time to rest. And I don't think I mentioned the CCI, but you can see that it too is right at that 100 line, getting ready perhaps to roll over and cross down and head into bearish territory. So let's see how this worked out. That I noted that had you exited at the area where the PPO line tested back in November, at that point there had been a little bit of a rise, and the premium, the bid premium, was $5.98, which would have been a 68-cent profit. Holding it through that the fifth stage wobble, the premium on April 13th there was still 63 days left until expiration. The delta was at that point was 94, and the exit premium was $14.15. So we paid $5.30. We sold for $14.15. That is a profit of $8.85, or 167% profit. Not bad. A point that I would like to make at this time is excuse me, that a squeeze is a squeeze. It doesn't matter what time frame it's in, that you can be using intraday charts, a 1 minute, a 5 minute, 15-minute day. A squeeze plays out on that in the same way it does on a weekly or monthly chart, that they go through the same 7 stages. Every single squeeze has to go through those 7 stages. Now that doesn't mean that it can't re-squeeze in there as it's testing support and deciding whether it really is ready for another leg up. But all of the squeezes go through the same stages. We've discussed the P3.5, and they will give alert signals and confirmation signals, and this is what you would follow before entering a trade. You're going to have the alerts that are showing bearish divergence to signal that there's an undercurrent, there's something brewing, and this can be seen on the RSI and the CCI as the peaks and valleys get lower and higher and so on, will give you a heads up that things are changing. The RSI indicator will point and start heading down, and the CCI begins to drop below 100. There will be negative candle on the chart, and the 8 EMA will start moving down toward the 13 EMA. The black line of the PPO and the ADX lines will be coming closer together as they kind of mimic each other. The PPO histogram blocks will be narrowing downward. The blue blocks will be getting smaller, shorter. The ADX line begins pushing away from the black PPO line as the minus DI line begins to start pointing up and heading up. The bearish momentum is going to start building, and so the plus DI line will start heading up while the green or the plus DI line starts heading down. Now your confirmation signals, they can happen at nearly the same time or close one right after the other. You're going to have a PPO line cross down over its signal line, and the histogram is going to be seen as crossing over the 0 line, and the minus DI line will cross up over the plus DI line. And again, I suggest waiting for an actual cross before you enter. That there's always that temptation to jump in early, but it's just advisable to wait for a cross. Now, not too long ago I had someone contact me and say, for the confirmation signals on a P3.5, is the cross down of the PPO line, is every single PPO line cross down going to be a P3.5? And it isn't. One of the clues, and it's what was listed in the alert up there, is prior to a PPO line cross down, you are going to want the stock to be overbought. And you can see this in the RSI and the CCI indicators. So you are going to want to see that big green peak of a CCI line to have happened just prior to the PPO line crossing down. It's not every PPO cross. It is specifically ones where the indicators are showing that it is overbought, and that is the formation of this P3.5 pattern, is trading the downside after a nice climb up where it is overbought. As the trade proceeds, you will begin seeing other signals that will show that there's momentum building behind this drop that's taking place as the P3.5 pattern unfolds. You will have the minus DI line will cross up over the black ADX line. There will be candles that will be closing below the 8 EMA, and eventually the 8 EMA will cross down over the 13, and perhaps both of those then will cross over the 21 and the 55, and so on, as momentum begins in this pullback in price. As we look now, we're going to be looking for a beginning point for a P3.5 trade. Instead of looking at one that has already happened, we're going to be looking at the very beginning stages. So we have the RSI line starting at the top of the chart here, where we have it overbought. We actually have had a little drop, and then it rose again, so that the upward movement may not be quite over, but we can see that it's getting tired. Here we have had a negative candle. It tried to recover. Now we've had another one that has actually kind of crossed through the EMA lines. Then we've had a positive one. So we're just watching as a brewing weakness may be forming. We can see this in the CCI. We see this divergence that we've been discussing, where the peaks are getting lower. It actually crossed below the 100 line, but has flattened out. Here the plus DI line has dropped. It's getting ready to perhaps cross through the ADX line, but the minus DI line has not taken any interest. Has not raised its head. It's not getting into the act here at all. The PPO line is getting ready to cross over, but it could, as we've seen from P3s, it could bounce here and do another little leg up. Stepping back, we can see that this was a P3 that went through the 7 stages. It's perhaps getting ready to expire here, that we had some wobbles. Here's the parallel lines, and it's getting ready to perhaps end and tire out and expire. So this then, as seen by the mimicking the lines coming close together here, could be the earliest stage in the beginning formation of a P3.5. So let's see what happens. The next candle, we're looking at a daily chart. So here the RSI dropped further. It's right down here to the line to determine whether it's going to stay in bearish territory or whether it's going to drop down here into I'm sorry, I said that backwards. Drop down from bullish territory into bearish territory. My goodness, we've had, there's a little red candle right here, and then now we've had this larger red candle. We have the CCI dropping below 100. The minus DI line has definitely risen and getting very close to the plus DI line, but they have not crossed. They're just close. We can see some other times here where they got close. So we don't want to enter until it actually crosses over. And we have the PPO line has crossed down here. And this has kind of, I'm reading the note up there that finally after 4 weeks, since the exit of the P3 trade, which the exit was right here, the DI lines have kind of rested and things have gone rather flat. It had a little pop, but again it went flat for a couple weeks. That finally now the minus DI line is getting into the act, and that we look like the this upward trend is losing its momentum. Entry happened the next day. Here's another red candle. You can see that we're into bearish territory now. Things have continued to drop. We have some volume here in the selling. CCI has continued down farther, and we have had a cross of the DI lines, and now we have more significant white space between the PPO lines that shows that truly this has weakened, and chances are we'll pull back and drop down to test some area here, whether it's the pivot points or one of the EMA lines. I don't know if it will drop down to this level, to this support level here of say the 233, but it could drop. The 144 supplied right there, supplied support in the past, and it could be that it would drop down to this level, which is also the support 1 area as seen on the pivot points. So we purchased the March 2013 68 strike put on September 26th. There was 170 days left until expiration. The delta was 48 and the premium was $3.72. That would have been $372 per contract. Now the exit rules on this, and we'll kind of recap, remembering that sometimes there can be a wobble, and the wobbles then give some of the alert signals. So we're going to watch for the alerts and stay on our toes, but we're also going to watch and see if it has hit our price target where we or our profit target where we would be happy with the profit, and we will sell. The alerts are that the RSI starts rising from being oversold. The 8 EMA rises closer to the 13 and appears as if it might cross. There's some positive candles that are taking place in conjunction with the other alert indicators, and the CCI rises toward the minus 100. The PPO histogram blocks begin to narrow. They get smaller and closer to the zero line, showing positive divergence would be a clue that it's time to exit. Things are weakening in the downward trend. Or the black ADX line flattens or curls downward, and the plus DI starts to head up. So that would show that the bears are getting anxious and ready to take control, while the minus DI line or the bears start heading downward. The confirmation signals are a crossover of the PPO line over its signal line, or a cross of the 8 EMA over the 13. Now both of these, as I mentioned, in conjunction with the P3, these are excuse me, these are going to give some of the profit away, so that if you have set a profit target, it is sometimes better just to take that profit, be satisfied with the trade and not try to get every single dime. That it's better to leave a little money on the table and just move on to a surer trade at that point. So we were correct in what we were seeing shape up. This is where we entered as the stock was overbought and dropping. The minus DI took control. Then there was a little bit of waffling back and forth. It went through all the stages. These, if you, we had the PPO cross, so this is where we entered. We had a test of the signal line. We had a second test of the signal line. We actually had a third test of the signal line. And each of these you can see is where you had a candle or two up, but it did not cross. These are the wobbles that would have kind of kept us in the trade. This was a little scarier, but you can see that the minus DI is still in full control. The lines have spread apart. This is that number 6 sweet spot area that makes that V, or as I was saying, kind of like a horn. And at the same time we see that a P3 is getting tighter and tighter. So it's this drop down that is forming this P3. The lines have spread apart. The PPO line has not yet crossed up, nor has the ADX line started to curl and start to roll over. That will be the signal. The exit signal is this curl down, but we can start seeing that this is at a bottom. We're at a support level that has supplied support in the past. There's those candles that we discussed earlier that bounced against the 144 line. We are right down here to support 2, to S2 of the pivot points. It actually dropped down and bounced up from that and looks like maybe it's going to form a bottom right here. So a wise trader would say, you know, I don't need to be greedy. This has been a wonderful trade, and just decide that rather than hold on to squeeze every dime out of it, it's time to get out and move on to a trade that's just beginning rather than one that's ending where you're squeaking out every penny. The trade, we closed it on November 16th. The bid premium at that point was $6.56. There's still 119 days left until expiration, but that's the beauty of options, that you can sell at any point along the line when you see that the trade is fizzling out. That if for some reason the market as a whole was in more of a correction, it's possible that you would have taken this right up to expiration day if price was continuing to drop. But as it was, it looked like it was finding a bottom, and it was at a support level, and it was time to get out. At this point, the delta was now 81, and we had paid $3.72 less the premium. The bid premium now was $6.56. And so that was a $2.84 profit, or 76%. P3 and P3.5 patterns can be traded on all of the expiration options that are available. That most often using leaps options, you would be using a weekly or daily chart in order to find the pattern. For using monthly options, you would be using a daily or 60-minute chart. You could use a 60-minute also or a 30-minute for swing trades that last 2-3 days and trade them using weekly options, or for those that are interested in day trading, could use a 10 or 15, 10 or 5-minute chart and use it for day trading. And as I mentioned earlier, that the P3.5 and the P3s play out going through the same 7 stages no matter what time frame you're trading. They still have the chance that they'll re-squeeze. They experience the same toddler wobbles and come to that point of stage 7 where they expire. And you can expect to see that in any time frame chart that you are looking at. And you'll get to the point where you will recognize these patterns. Your eye will just catch them and you'll be able to see instantly where it is in its process of unfolding. They're my absolute favorite patterns to trade.